Hello, everybody. This is Sun Chang. Uh, Today is 2022, July 5th. And let's go to Yahoo Finance and Market Beat, okay? Mm. What articles do we have tonight? Do we have interesting articles? Let's look at it closely. Five reasons to climb aboard Carnival stock. Okay. Care slash files for Chapter 2 bankruptcy protection in U.S. Earnings revisions, why you shouldn't count on a rebound in stocks yet. Two pet health stocks watch and one to avoid. Okay. Mm. Pat Vivo Holdings is a growth stock worth a look. Uh, Five reasons to climb aboard Carnival stock. Three top rated dividend payers worth your attention. Um, PVH Corp stock approaching key support levels. Hello Group stock is attractive value speculators. Um, Passive furniture quality proves its value. Hmm. Pat View hold PVH Corp stock approaching key support levels. Uh, how to profit in the bear market. Zimmy created its shipping service spot opportunities even when disaster strikes. Why I'm buying Pfizer and you should do too. Okay. Stock futures fall as recession concerns linger. Recession fears still missing at happy hour morning riff. The elephant in the room for Tesla, according to the Naj, jobs, jolts, and the Fed. What to know this week? Hmm. Housing correction is dead ahead. Warren's Moody's chief economist Mark Zandi here's how he sees things playing out over the next. Hmm. Jim Cramer advises to recession-proof your portfolio with packaged food stocks. Here are two names analysts like. Bitcoin prices rally but failed to break $20,000, while cryptos may slide again soon. Here are three top stocks the insiders keep pouring millions into. Following these in the know, big wigs could be a sharp way to bid. Okay, I could scroll down and read pick articles, but I'm just gonna stop at this point and read the articles that I just chose. And um, after reading every articles that I just chose, then I'll just go back to where I was, and then I'll briefly look for new articles. Okay. Okay. What do we have? The alpha in the room for Tesla, according to Webbush's then eyes. Some storm clouds are appearing on the horizon for Tesla bulls after respectable second quarter. Hmm. The elephant in the room for Tesla is what dark economic storm clouds on the horizon. The Musk himself thinking recession risk is imminent. What does this mean for Tesla's the main story going forward? Web Bush, senior equity research analyst, then I've stated in a new note to clients. In a nutshell, while June delivery numbers were ugly, and nothing to write home about. The street will be focused on the trajectory for the second half and the overall demand picture staying firm. The electric vehicle makers said over the weekend that second quarter deliveries tallied 254,695. While that represented about 27% year over year growth, it fell short of analyst estimates for 256,520. In a note, City Italy Michele pinned the miss on a shortfall in deliveries of Tesla Model 3 and Model Y. The electric vehicle company's performance was held back by an array of issues affecting the auto industry, ranging from semiconductor shortages to COVID restrictions in China. Uh, Tesla's second quarter suggests demand hasn't begun to reflect consumer concerns around a recession. Hmm. Suggests demand hasn't begun to reflect consumer concerns around recession. In fact, it's reasonable to say Tesla's results would have been stronger if not for supply chain challenges constraining demand. But analysts generally agree that if demand was slow noticeably in the second half of the year, it could add pressure to Tesla's bottom line at a time of high cost. That will likely hit the stock, which is down 35% so far in 2022. We suspect that the interplay of price and cost may matter most for Tesla earnings this year. This interplay, we believe, presents a downside risk to second quarter, given that Tesla experienced sharp battery metals inflation. But the price hikes of upwards of 10K dollars it announced across its lineup generally apply only to new orders and not to existing reservations. And blah blah blah. So, what's the point of this article? What's the point? Some storm clouds are appearing on the horizon for Tesla bulls after a respectable second quarter. So some storm clouds are appearing on the horizon. Oh, okay. So in the near future, uh, we won't have a like upward trend. Instead, we'll have a downward trend. Either downward trend or it could, you know, rally, back and forth, up and down, uh, because of recession. Hmm, I think that's the point here. Okay. Housing corrections data ahead. Warren Moody's chief economist Mark Zandi. Here's how he sees things playing out over the next several months. Okay, home prices across the United States continue to rise, with the entire country seeing an increase of over 1%. Between April and May this year, according to the National Association of Realtors. It's even higher in some parts of the country, including the Northeast, where prices rose by an incredible 15.4%. Uh, Yet, for those continuing to watch this rising home prices, chief economist for Moody's Analytics Mark Zandi warns that a correction could be dead ahead, but not as many of fear crash, he says in an interview on CNBC's Flash Money. Hmm. Spiking mortgage rates, first time home buyers locked out, uh, institutional investment housing here to stay. What to read next? Okay, what's the point here? Housing correction is dead ahead. Hmm. Warns Moody's chief economist Mark Zandi. Is that mean housing price correction is about to come? Or does that mean housing price will go down soon? It's a bit ambiguous. It's either ambiguous or I'm not smart enough to understand what that means. But hold on. sign up for institution of fund giants like Blackstone and some articles ambiguous. Is that ahead? Warren's Moody chief economist Marzani. Uh, Spiking mortgage rates continue to climb as interest rates rise further. With some forecasting the short-term a rise of 3.25% on a 30-year fixed rate loan, mortgage rates are now sitting at about 6%. As these rates rise, mortgage payments can be several $1,000s higher than they were a year ago. Zandy says, and this loss of affordability exactly why he sees a correction in the near future. Okay. If we stay around 6, I think that the market will adjust and will eventually get the correction. If it goes much higher than that, we'll get a more significant pullback in the housing market. So, okay, I get it. So he thinks we'll have a pullback soon, and that he thinks that we'll have a correction in the near future. Okay, near correction in the housing market. Gene Kramer advises to recession-proof your portfolio with packaged food stocks. Okay, portfolio packaged food stocks. Shaheen Social Group. And what else do we have? Hostess brands. The next stock is one of America's iconic snack brands, Hostess. The makers. Ah, um, 감자예요. 음. I'll call you soon. I'll call you soon. I'll call you. I'll call you right after this is done. Where are you now? Are you still hanging out with your friend? Still, still what 친구? 버스? 아, 버스. Bus, you're on your way back home. Okay. Get back home, take a shower, and take a rest for a moment. Ah, I love you too. I love you too, darling. Uh, get back home, take a shower, and just chill for a moment. Okay? I'll call you right after this YouTube live is done. Uh, when do you think you're gonna go back home? In 30 minutes? How long will it take? 30 minutes to get back home? How long? How long do you think it will take to get back home? Mui, can you hear me? Mui, can you hear me? 40분 뒤? Okay, I got it. Perfect. 35 minutes later, okay. 35 minutes later, get off the bus, take a shower, and then around 11:30 or so. Okay, I get it. Oh, oh, okay, got it. When you get off the bus, I'll call you. That's about at 11, right? 11 at night. Okay. Ah. Okay, let's get back to where I was. Hostage brands. I was talking about hostage brands. Let's keep reading this article. The next stop is one of America's iconic snack brands. Hostage, the makers of Twinkies, Ho-Ho's, and Donuts. Hostage has provided both snacks and joy for more than a century. The company has issued the health niches of the food industry and instead focused on doing one thing, making a long shelf life cakes and snacks that appeal to kids. This hostage has succeeded. I've had Twinkies before. It's really, really sweet, but it keeps making my mouth water for real. Anyway, this success can be measured objectively in the most recent earnings report released in May for first quarter 22. Hostage saw solid growth in multiple key metrics, including total revenues, gross profits, and adjusted EPS. At the top line, the revenue of $332 million was up 25% year over year. All in, we continue to believe the company has positioned itself well across the snacking category, and we believe the multiple should continue to move higher given its consistent performance during a difficult to navigate environment, and summed up. Okay, a lot of experts, including Warren Buffett and this guy, uh, keeps keeps saying that it's really good for you to invest some money in food stock in this recession period. Instead of not instead, but like a lot of experts recommend it, probably because it's recession proof. Because we have to eat food, right? Even when we have hard time, uh, we don't have any choice. It's a must thing that we have to do on a daily basis, right? Okay, I'll have to take that into consideration for real, cause so far I've been thinking only the stocks related to software has gotta have bright future, cause all we do at the end will be changed into data, and that data will be used as an some kind of service, right? So, company that deals with data uh, will possibly have a successful story, right? Mm. That was the reason why I spend most of my money on a software company. But especially in this recession period, if you want to have like conservative investment, if you want to stick to conservative investment strategy, then it's better for you to put some money in like food stock, not like giant big company, high tech company. Wait, okay. Bitcoin prices rally but failed to break $20,000. While cryptos may start again soon. The stock market sell-off and issues in crypto lenders have hit pressure on crypto prices. Pressures on Bitcoin miners represent a new problem. Here are three top stocks insiders keep pouring millions into. Following these in the no big weeks could be a sharp way to beat the not marriage market. Three top stocks insiders keep pouring millions into. Following this in the no big weeks could be a sharp way to beat the not marriage market. Okay. Bear markets are noisy and volatile. It's difficult for investors to cut through the noise, find the right signals, and discover good opportunities. One of the clearest signals is insider trading activity. When the senior directors, founders, and large shareholders of a corporation buy or sell shares, it could be a signal of underlying strength or weakness. Some studies have found that net insider activity in any month is positively correlated with stock price action over the subsequent 2 months. Put simply, insiders buying more shares of their own companies a green flag. Here's a look at the companies with the highest insider buying activity in recent months. Occidental Petroleum. Energy stocks have outperformed nearly every other asset in the market this year. However, the sector has lost momentum in recent weeks. Crude oil lost over 20% of its value, deeping energy stocks into an official bear market. Insiders at Occidental Petroleum see this deep as an opportunity. Of the 22 total insider trades over the past 3 months, 16 were insider purchases. Okay, a lot of insiders are buying Occidental Petroleum stock. Okay. On net, insiders purchased more than 70 million shares of the company during this quarter. Senior directors Christopher Champion and Vicky Bailey were net buyers during this quarter. Clear indication of underlying value. A successful investor are buying the stock at the same time as a clear indication of underlying value. Occidental Petroleum. Hmm. Hmm. It went up so much. It went all the way down to 12.95, and it got back up to 58.64. Hmm. Pfizer insiders have been aggressively buying shares of financial technology company Pfizer. The stock has been beaten down along with the rest of the fintech sector. However, it has outperformed its peers. Okay, it's down just 17% year to date, compared to the Nasdaq 30% plunge over the same period. Um, Now insiders see more room for growth ahead. Over the past 3 months, over the past 3 months, insiders completed 14 purchase transactions for a net of 1.63 million shares. Senior directors Guy Sherlock and Dole Simmons were not buyers, but the biggest transaction was executed by investment company GitLab OK. Software platform GitLab has lost 60% of its value since November last year. It's being caught in the ongoing tech bear market. Okay. However, the company software package could see robust demand as corporations try to automate processes and improve efficiency during a downturn. This is why the management team expects top line growth of 58% this year. Mhm. Meanwhile, gross margins are as high as 90%. Presumably, the company is in a strong position to sustain its growth strategy despite the coming headwinds ahead. Uh, GitLab's management team is certainly confident about its prospects. They've been aggressively buying shares of the company. Insiders purchased 80 million shares across 15 transactions the past 3 months. C-suite executives like Michael McBride and Robbins were buying during this quarter. Seed investor also raised its stake in the company. GitLab. Hmm. Pfizer V. What is this stock? Let's go to statistics and look at this company explanation profile. Together with its subsidiaries, provides payment and financial services technology worldwide. The company operates through acceptance, fintech, and payment segments. The acceptance segment provides point of sale, merchant acquiring, and digital commerce services, mobile payment services, security and fraud protection products. Clover, a cloud-based point-of-sale and business management platform, and Clover Connects, an independent software vendors platform. This segment distributes through various channels, including direct sales teams, strategy partnerships with agent sales forces. It serves business, banks, credit unions, other financial institutions, merchants, and corporate clients. The company was incorporated in 1984 and is headquartered in Brookfield, Wisconsin. Okay. Huh. Keep pouring millions into GitLab. And what else did we have? GitLab and Fiverr B. Five reasons to climb aboard Carnival stock. Okay, earning pandemic restrictions. Few businesses were as hard hit by the coronavirus outbreak as cruise line operators, and Carnival Corporation was no exception. Yet, despite the progress the company has made over the last couple of years, its share price has completed a return voyage to March 2022 levels. Fears of looming recession and the potential impact on leisure travel demand have sunk Carnival stock back below $10. While the current inflationary environment appears to be increasingly wearing on global consumers, the cruise industry has a secret weapon: major pent-up travel demand. This combined with the following five forces should keep the wind at Carnival sails regardless of how choppy the economic waters get. Easing pandemic restrictions, road trips are expensive, fleet operations occupancy are trending higher, Carnival is recession resilient, the stock is cheap. Okay, this guy, author, uh, hmm. Easing pandemic restrictions, government guidelines around COVID-19 vaccination testing as they pertain to cruise lines have eased in the US and Canada. When you run North America's most popular cruise brand as Carnival does, this is very welcomed news. In the company's recent business update, CEO credited relaxed coronavirus requirements for driving increased demand for cruises. And with so many Americans craving a vacation after months of lockdown conditions, this is helping unleash a potent revenue stream. In its most recent fiscal quarter, Carnival served over 1.6 million guests worldwide as people became more comfortable with the cruise atmosphere. This number should only go higher as the recovery continues to unfold. Okay, to climb aboard Carnival stock? Carriers sought files for Chapter 2 bankruptcy protection in U.S. Scandinavian Airlines on Tuesday filed for bankruptcy in the United States, warning of walkouts. by 1,000 pilots a day earlier had put the future of the carrier at risk. The move adds to the likelihood of travel chaos across Europe as the summer vacation period begins. Hmm. Filed for bankruptcy in the United States, warning a walkout by 1,000 pilots a day earlier had put the future of the carrier at risk. The Stockholm-based SAS airline group said he had voluntarily filed for Chapter 11 in the U.S., a legal process for financial restructuring conducted under U.S. federal court supervision. Filing for Chapter 11 in New York put civil litigation on hold while the business reorganizes its finances. Hmm. Huh. Earnings revision, why you shouldn't count on the rebound in your stock shade. Hmm. The only thing certain about the S&P 500 is that its value is based on the expectation of future earnings. Hmm. In that light, an increase in the expectations for earnings should lift the market, and a decline could make it fall. Looking at the latest figures from Facet, the outlook for earnings took a turn for the worse over the past week, and it points to another downdraft in equity prices. Not only has the outlook for a quarter second softened, but the analysts are also trimming their expectations for quarter fourth, and even 2023. And we don't think this phenomenon is over. Based on our outlook for inflation, the Fed, and consumer spending, we think the downdraft expectations has only begun, and it will get stronger before it's played out. Energy is the standout winner for quarter second 2022. Um, why you shouldn't count on rebounding stock share earnings revisions. Okay. The outlook for quarter second earnings fell 20 basis points over the past week, which isn't much until you consider the outsized impact the energy market is having on the outlook. The outlook for quarter second earnings fell 20 basis points over the past week, which isn't much until you consider the outsized impact the energy market is having on the outlook. The energy sector is expected to post a triple-digit EPS gains versus last year, and the consensus figures have only risen over the past 6 months. As it is now, the energy sector is expected to grow earnings by 217%, and the consensus estimate is up a full 8,000 basis points since the start of the quarter. This is offsetting, but not completely downtrending estimates for tech, healthcare, staples, communications, uh, discretionary utilities, and financial stocks with the discretionary names in the lead. The outlook for consumer discretionary stock is down 2,280 basis points since the start of the quarter, and it is trending lower now. The technical outlook, S&P 500 is trending lower. Uh, mhm. So I get it. So outlook is not so bright. and quarter third, quarter fourth, and 2023 will all likely have a negative outlook uh, from what he sees, and so that's the reason why we shouldn't count on a rebound in stocks yet. Hmm. Okay. Ah, come on. Yes, yes. I love pet and pet industry. Of course, it's gonna go big, right? The two pet health stocks to watch and one to avoid. Pet health is still a growth market. Growth stocks have been getting pummeled this year due to fears of a slowing growth, tightening margins, and recession. But in some cases, the baby is getting toasted out with the bath water. In this case, it's more like the puppies and kittens are getting toasted out with the bath water, but the meaning is the same. Pet health estimated at $11 billion in 2021 is growing at a high single digit CAGR, and it is expected to be resilient in the face of inflation. Why is it resilient in the face of inflation? It's shifting consumer habits. And just like within the recent valuations, names like Paco Health and Wellness Company and Chewy are too good to pass up. Okay, we on our list we have Wellness Company, Paco, and Chewy. Okay, let's go. Paco Health and Wellness Navigation Inflation. Need them issued an update on Paco Health and Wellness in early June following a meeting with management. Management told them that not only were they able to successfully pass a price increase through to their customer base, but they saw little to no evidence consumers were trading down. Chewy gets upgraded twice. Okay, Pac-Man is late to the game. Okay. Let's look at Paco and Chewy. Home goods boom is over, leaving the bed and bath stocks high and dry. Paco, Paco, and wellness company Chewy. This growth stocks value grappling inflation, but should investors buy now? Hmm. Okay. Paco Health and Wellness. Paco Health and Wellness Company and Chewy are too good to pass up. Huh. Pat Vivo is a growth stock worth a look. Pat Vivo enters into a definitive agreement for lead therapy. The market conditions aren't screaming, but buy growth stocks now at us. But that doesn't mean all growth stocks like Pat Vivo and or will suffer the game afflictions. Pat Vivo caught our attention because of two things. It's market and a new deal to market. It's lead therapy. Pat Vivo is a biomedical device company focused on animal health, which is rapidly growing segment of the American economy. The company is focused on equine athletes and companion animals, and is equine athletes and companion animals, and is currently marketing a single therapy called Sprine. Sprine is an austere cushion made from thousands of tiny microcells and is being used to replace missing cartilage and provide a scaffolding for other types of tissue repairs. The agreement is with MWI Animal Health, a nationwide distributor of animal health products to veterinarian retail businesses. The agreement is for AMWI Animal Health to inventory market and promote Sprine to its customer base, which we view as incredibly bullish. MWI Animal Health is a subsidiary of Source Version, which is itself a leading distributor of medical and pharmaceutical products in America and internationally. The deal should not only boost sales of Shrine, but also open the door for a new product line uh, as they become available. Havivi is boosting a pipeline of 17 devices that should begin hitting the shelves. At least one ad sees an opportunity in Pet Vivo. Technical outlook. Pet Vivo, Pet Vivo. Hmm. 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 Let's go to profile. Biomedical device company in the manufacturing, commercializing, licensing medical devices and biomaterials for treatment of afflictions and diseases in animals. Its lead product is Sprine, a veterinary administered inarticular injection for the management of lemons and other joint afflictions such as osteoarthritis in dogs and horses. The company's pipeline products also include 17 therapeutic devices for the veterinary and human clinical applications. Paveva Holdings was founded in 2009 and is headquartered in Minneapolis, Minnesota. Such a small company. Only 50 employees are working in this company. Uh, Advancing animal health through innovation. Hmm. Pet Vivo. Uh, hmm. Uh. Okay, its outlook is bright. I have to admit it, but starting from 2019 till 2022, uh, never have they had uh earnings. So far, they've had a negative earnings. Hmm. Do I want to invest some money into it? I don't know about that. Hmm. Pet Video Holdings. Three top rated dividend payers worth your attention. Investing for now is about quality, not quantity. If you are positioning yourself for the second half of 2022 and for 2023, we urge quality over quantity. Um, While not all segments and industries are in peril, it is also true that not all companies within well-positioned groups will do well. This means it is more important than ever to be choosy when you invest in dollars, and that's why we've been screening for names among the marketbeat.com. Merit vacations worldwide for the hospitality rebound. Hmm. Shell A, top rate energy company, innovative industrial property. Well. Hello Group stock is attractive value speculators. Chinese social media company Hello Group stock has fallen on the year despite being profitable. The company operates two major apps, including the social media app Momo and Tantan, dating app similar to Tinder. Top line revenues and user growth has receded with the spread of COVID vaccinations and drop in cases in China. Chinese ADR stocks have fallen largely out of favor and with investors as their financials can't be verified and Chinese regulators could literally take companies out of the market. This has caused the valuations to drop significantly, which may mitigate some of the risk of owning Chinese stocks for speculators. The company expects a rebound in its Tauntaun dating app business as Chinese lockdowns get lifted the second half of the year. Hello Group has roughly $2.4 billion of both restricted and non restricted cash investments, equating to $5.86. Um, Momo, the dating app. Okay, Hello Group. Hmm. Bassett Furniture quietly proves its value. A soft landing for Bassett Furniture. The entire future furniture industry has been in a correction. And Bassett Furniture was not immune. The correction was driven by historically high valuations, a fear of slowing growth, peaked rebound, and a round of COVID-related shutdowns that had manufacturing in key hubs at staying still. Uh, Now, more than a year later, and with share price cut in half, Bash Furniture is proving its resilience in value and offering up an attractive entry point. The company's quarter second results certainly shows business in the future furniture industry has picked and even suggests a deeper slowdown is on the way. But what they also show is the company well capitalized and well prepared for the times. Oh yeah, the furniture business is still strong and fueling a healthy dividend share repurchases too. Best Furniture confidently beats the consensus. Blah blah blah. Okay, Best Furniture. Uh, Along with other furniture companies, um, its price went down drastically, but since the company just I made the company that I just mentioned have such a strong resilience. Um, uh, they didn't go down. Instead, they went up. Hmm. It was the point. PVH Corp stock approaching key support levels. Fashion brand PVH Corp stock is down on the year, but the company is still profitable. PVH gave lowered guidance moving forward despite sellout at full price remaining strong as consumers continue to prove resilient in denim, shorts, and woven top categories for both the premium Calvin and Tommy brands. Hmm. Okay, shopping brand. Well, I'm buying Pfizer, and you should do it too. Hmm. Okay, this is it for today, and because of work live starting from tomorrow, I'll have vacation, not vacation, because of the work outside the office. Uh, I'll probably come back 3 days later. Okay. I'll see you guys and happy Tuesday now. Okay. Bye bye. Is today Tuesday? Yes. Bye bye.